Welcome to the show. We're getting ready to see the markets move. Fireworks are going to be firing off here any second. We're going to get the reaction to the FOMC meeting notes. And really, I think anything is possible. The market's formed a little bit of a base. I've taken some risk positions. We did live trading today, and it really was choppy sideways action from the minute the market opened, really all the way up to this moment in time. I've got Tim with me. Welcome, Tim. Haven't had you on the show in a little while. How are you doing today?
Doing good, doing good. Let me turn up. I'm looking. It's always different.
There you go.
Right there. Let me turn my brightness a little bit. Is that better?
It is better. It is better.
All right, good. Yeah, sometimes depending on what I'm doing, my brightness needs to change. I'm doing very good. And I'll tell you this. One of the reasons I'm doing really good, I put a tweet out an hour and some change ago. This whole day, Josh, we have seen a lot of negative sentiment. If you're scrolling through X or you're scrolling through crypto news sites, just a whole lot of negativity, a lot of bearishness. I mean, a lot of those influencers who are fans of like sub 10K Bitcoin still. I don't know how you look at what's happened over the last year and look at what the next year looks like and still think Bitcoin could drop below 10,000. But they're talking a lot right now. But the reason I say that is because this puts me in a great mood about where the markets are, because sometimes when you've been choppy and you're not really certain what the next move is, you kind of look to make the opposite move of wherever the sentiment seems to flow. Wherever retail seems to get emotional, you go the opposite direction. So if we were super bullish right now as a whole, on the news sites, on X, then I would actually be concerned right now. I would be concerned that the markets are going to take a bigger step to the downside. But with all this negativity, this is just prime, perfect example of what manipulation looks like, so that retail investors who don't know what they're doing can't win. I'm with you. I know we talked about right before the show. I have this feeling that we are on the precipice of something really big to the upside very soon.
Well, so really quickly off of the initial news, I've been trading XRP, and I took a little quick, fast position and pulled out about $1,000. But I just took it because the market seemed to be turning as it's interpreting the FOMC notes. So it gave me a little pop up, and now we're turning down. So I had a stop loss in even before the notes came out. But at the moment, the market's turning south. Okay, just a little south. Today's been very choppy day. What is the market looking for from these notes? I don't, if I pulled up CNBC, someone's examining the notes. I'm not watching the live data on the notes. You can maybe look at that, Tim, while we're talking. But I can tell you right now, it doesn't take much. It just takes one or two Feds, even a single Fed, dissenting and saying that he imagines that there should possibly be a rate hike in 2025, or that the two rate cuts that have been put on the table, that maybe they shouldn't cut at all, or maybe only look at one cut. It wouldn't take much for the markets to absolutely panic. The markets are nervous. I cannot make this more clear. In the last couple of videos, Tim, I've talked about the fact that there is a diamond pattern. Now, I don't care if people out there say, well, I don't trust the diamond pattern, Josh. But let me just tell you what the diamond pattern means, okay? Diamond patterns form in moments of indecision. So even if we don't go off of this signal to the upside or to the downside, the diamond pattern, the fact that we're in a diamond pattern, which it starts off with a series of it's basically like a megaphone. It starts off with price expansion, where you get higher highs and lower lows, and then it begins to reverse and compress, right? It basically is telling you the market doesn't know what to do. It's uncertain about direction. And no matter what happens today, we have two catalyst events that are ahead of us. One is the Donald Trump inauguration. And, there's the idea. First of all, we had a fabulous first wave when he came into office, November, 4th, 5th, the election. We had this incredible wave. Now, I often have traded long enough to know that typically when something good happens, it happens in multiple waves. And so we've got the initial wave. It kind of was an overreaction. People were too enthusiastic, too optimistic about, how everything was going to go. Maybe they were ignoring some problems. And so we got a little bit of a sell down, right? That was because of an overreaction on the part of Wall Street. But I believe that the market still carries optimism towards the idea of pro-business deregulation. And let's talk about what's happening in the business world right now. We have the entire world coming to Washington to cut a new deal. They know that things have changed. The humor, the sheer laughter over watching Mark Zuckerberg squirm and try to sort out the future of Facebook, Meta, with this new era of politics has been entertaining. I caught something that was said this morning, and we're not getting political. Let me check XRP. We're getting a little bit of a pop. I might want to get back in to my position. I'm live trading while we're talking. It's holding the 9 EMA. We're going to call that support. So I will go back in. I wanted to watch the 9. It came back. I'm gonna go in with a little bit of position size, and we'll keep this trade going while we're live, right? But I heard a comment today, Tim, and we're not getting political. We're just talking about these companies, and the guy talked about the tradition of free speech. The free speech tradition. I thought that was hysterical. It's not tradition, my friends. It's law. It's the law of the land.
Law, yeah.
Yeah, we're talking about the Constitution.
It's an important law.
It's a very important law. You have the right to communicate and to express yourself, and for people, powerful organizations, not to quiet you, to stifle you, or prevent what you're saying. It's not a tradition, folks. This is the law of the land. It's why my family, which were immigrants on both my mother and father's side, came, because they would have been sentenced to prison. They would have been thrown into the gulags, as you said. They would have come and gotten them and sent them to Siberia. They left those countries where there was no freedom, and they came to this country where there was freedom. So put your politics aside. I'm pro-capitalism. I'm pro-free speech. And it's amusing to see the shift and change. Now, how do we translate that into money? We translate that into money in that the Magnificent Seven companies, you saw Elon, jumping up on stage. He spent $250 million to participate in that election, and the shares of Tesla went up. His net worth went up billions. That was the smartest investment he ever made in his life. $250 million spent there, produced billions of dollars for shareholder values. And now you see the rest of the Magnificent Seven, the rest of them coming to tow, showing up at the White House, trying to cut deals. Now, why am I saying that? Does this has anything to do with Trump? No, it has to do with the economy and the fact that people understand that a shift is coming, and that it's going to basically produce winners and losers. Mark, who had been previously called a weirdo in the election period, they talked about throwing him in prison if he interfered with the election again, right? That strong language. And so we see him showing up to Washington, trying to cut a new deal. Trust me, if the most powerful men and billionaires and the most powerful companies in the world are looking to what's going to happen after January 20th, you and I should as well. So having said all that, there is a lot of potential for a second wave to this rally. There is. Now, here's where the rubber is going to hit the road. It's going to be with the earnings. So the fact is, the market is skittish. We've been moving sideways, truthfully, since December 2nd. The diamond pattern proves that. It unequivocally proves indecisiveness in these markets. Now we're skyrocketing, and I just made, I'll show you guys. So I already made $1,000, but if you can see it, I just made another $1,000 on my XRP, 1,218 and climbing. And let me take you into my chart real quick. I'm just going to show you this XRP. We're going to get into a conversation about XRP today. And, I traded this spot right here, and we just ran up right there. Okay, I didn't catch all of it. I think I got in right here. I originally traded it. Basically, I got out because we briefly dipped beneath the 9. And as soon as we reclaimed it, I got back in, and I'm now up 1,500 bucks. So nice little play here on XRP. We're going to get into XRP today, long-term vision. I can tell you that I like this pattern. I've talked about it in my live trading sessions before. I think I still can't remember the name. We talked about the fact that it's on every keyboard. It's basically like a giant bracket. And I see the same thing forming again here on XRP. If we go over to the Tesla chart, this was the pattern back in the day when Tesla was 200 bucks. Let me see if right here. Boy, when you get visually good to remember these things, look at this. Watch it with me, guys. We'll call that the keyboard bracket, right? This is what I see happening right now with XRP. You can't tell me that's not happening in this chart. So I'm looking for this to continue. I do expect some volatility. I think 2.345 is the price to watch. But ultimately, when we can establish being above 2.345, that's when this thing is going to take off and really go back on a run. I think possibly back to $3 and back higher than that. Let me just cool off because I'm all over the place. Let me just acknowledge everybody. Please, guys, take a minute and hit the like. We're going to have some really interesting analysis of stocks and crypto today. And I just want you guys to take a quick minute and feed the algorithm, feed the video out to more viewers, and hit the like for me. If you're brand new to this page, I don't think you can afford not to be a subscriber because I may not always be right, but I'm a risk taker. I'm a trader. And I give you guys what I'm doing, good or bad. I showed you right in front of you. I took a trade on XRP. I'm up still about 1,500. I probably should take the discipline to put a stop loss in. I'm going to literally do that live. All right. So my stop loss on this, it's currently trading. Let's do this real quick. It's at $2.32. So I'm just going to put a stop loss in at $2.30 on that bad boy. May tighten that up a bit. I'm going to go $2 and 2.2305. Now that gives me a potential of a $353 loss, which is okay with me. I'm up 1,300. As we get a little higher, I gotta give it some room to breathe. As we get up a little higher, then I'll raise that to break even. And as we get up a little higher, I'll either snap my profit and walk away and put the money in the bank, or I'll just break even, because that's how it works. I'm looking for a bigger gain. Let's take a step back. Guys, welcome to the show. Thank you for hitting the like. Thank you for hitting the subscribe. I've got Tim with me today. The last time I had Tim on the show, and I'm going to feed you, Tim, this question. The last time I had Tim on the show, he had been talking bearishly about Bitcoin. Now, I kind of knew what was going to happen. Shortly after that, Bitcoin broke up higher and was living up above 100K. And people were coming on to Tim's show saying, and by the way, Tim is on his own show on YouTube called Investing Bros. After this live, I'm going to end it here in about 30 minutes. And I'm going to go over and be on his show for the very first time as his guest. We're going to continue the crypto dialogue over there with his Tim's team. And so I want you to please come over there and join me. And if you're new to this page and you hit the subscribe, come over there. We'll be talking about crypto even more after that. After Tim had given those predictions, Bitcoin went up, but then gave it 2 or 3 more weeks, and Bitcoin came down to the target he was expecting. And that's one of the plights of being a charting analyst is sometimes you're looking down the corridor of time and you're seeing what's going to happen. And it doesn't happen in the next 2 days, but it might happen in the next 2 weeks. With that in mind, I'm going to call that another accurate win prediction on your part, Tim. You are obviously looking a little further down the road. Let's talk about how Bitcoin is performing and kind of the environment. You started off bullish when everybody else was feeling bearish. Last time you were a little bit bearish when everybody else was feeling bullish. Please explain yourself, sir.
Yeah, so it's been a fun journey navigating the X accounts and the YouTube, navigating the chaos of people who watch YouTube content. But I'll tell you what I've found to be a winning formula for me, Josh. And I'm not always right, just like anybody else. Show me a person who claims to be perfect at investing, and I'm showing you a liar, right? That's just not a thing that happens.
You're right.
That being said, my best calls, if anyone's been tracking me for years now, I've been doing the trading game in crypto for over 4 years now. If you've tracked my best calls, my best predictions, it has always been when the majority of people disagree with me. There's something about being a contrarian that really does pay off. And, recently, again, I've been accused of so many things throughout this bull market. Back in the summer when we eclipsed a new all-time high, and I told everybody, hey, guys, Bitcoin probably wants to cool off 20 to potentially 30%. I got called ridiculous names. People said I was absolutely ludicrous. There's no way it was going to happen. The Bitcoin ETFs were changing everything, and Bitcoin was going straight to 100,000, no problems whatsoever. Well, what would happen after that? Of course, we'd top out at 73,000 and then spend the next 5 months moving sideways and downward. How far? 30%. Then, when we eclipsed 100,000, I turned bullish after we had that 30% pullback. We rallied up above 100,000. I told people, hey guys, Bitcoin wants to correct probably 15 to 20%. Now, I will say, if you go and share my screen, it went higher than I thought.
Let me hit you. I want you to continue, but I also want to hit you with this. Getting a lot of comments, and people are saying, you said in the 80Ks. Okay, so I want you to address that. I'm giving you the screen, my friend.
All right. So when I said 80K, like I was just trying to go into, I was surprised that we made it all the way up to 108,000. Right? When I started talking about a bigger pullback, I didn't say it was going to be quite right here, but I said, watch us get just above 100K and then have a nice 15 to 20% pullback. Well, what would 15 to 20% be? I honestly thought this pullback back here in December, on December 5th, I thought this was going to be the mark, right? So I was looking for 87,000, 88,000 at the high. 20% would have brought us all the way down here to 82,000, right? So I had this zone where I thought 85 was very interesting. But again, this was based off of the historical analysis on Bitcoin that at this point in the market, we needed a healthy correction. And where we are, the maturity of a healthy correction would say 15 to 20%. Well, the reason that's not what happened was because obviously we made another higher high that I did not account for. This is one of those things, like I didn't get it perfect. Didn't call the top perfectly, but if you look at after touching 108,000, how far back did Bitcoin pull? 15.83%. So while my $85,000 level ended up not happening, and I can address that in a little bit. There's technically still a chance it happens. We're definitely going to talk about that on my channel if I don't talk about it here. But the 15% pullback, that was the prediction that was more important. And yes, when we had a top at the moment of 104,000, that would have put us down here between 87 and 82. But the minute that analysis was wrong, the minute we set a higher high, anyone who would have been following me knows that I adjusted my numbers. I then all of a sudden said, hey guys, the minimum here is going to be somewhere around 91. There's a chance we still go 20% and go towards 86,000. But the range, the window we're looking at is 15 to 20%. We hit that 15% right on the nose. And while I'm very open to a downward movement. What I saw happen when we made this move back here just a little bit ago, just a week and some change ago, and we came back down towards 91,000, we got some very good bullish signals. First of all, if you start to track some of the daily and larger time frames, the daily chart printed a buy signal for the first time since way back on November 6th. You don't want to ignore these buy signals whatsoever. Does this mean that there's no possible way we go lower? Not necessarily, but this buy signal, the LUXALGO oscillator buy signal that I love to use, it's my number one trading strategy, doesn't fail me very often. So I felt very good about not only was that buy signal in play, we also began to break out of a falling wedge pattern. If you look on here and you look at this descending green line and descending red line, this is a constricted movement called a falling wedge. And these traditionally break to the upside. Sure enough, that's exactly what happened. Now, this pullback that's happening right now.
Now, I'm loving, Tim, I'm loving your content, but just be mindful to go a little slower because it's like you're dripping hot gems here. And I want everybody to pick up, even like talking about the wedge. People are like, what? Yes, I see the wedge, but just go a little slower if you don't mind.
Yeah. Well, okay, so I'll go slow here. Falling wedge pattern. We'll go back to the first support level, December 9th. We started on December 9th, setting in, if you trace this green line, lower lows, right? So we bottomed out around 94.3 on December 9th. Then we came back and we set a lower low. We came down to 92.2 on December 20th. And then over here on December 30th, we came down to 91,100, a confirmed consistent trend of lower lows. In the same time period, though, we were tracking lower highs. The high, of course, up here back on December 17th of 108. The high, the lower high right here on December 26th of around just under $100,000. And then we wrestled on December 31st, came back up to 96,000 got rejected before breaking through on January 2nd, and then we would rally to go back up over 100,000. That was a very good, strong, bullish breakout that was predicted based off the falling wedge. Where I'm at right now, we get into the messiness of the situation where we talk about the possibilities of what could happen next. Again, this right here, this is a very strong bottom signal, Josh. I told you, not only the falling wedge pattern, that's a very good pattern. The LUXALGO indicator, which I see someone in chat saying, what is this LUXALGO indicator? I hear Josh talking about it all the time. This is an indicator that I legitimately trade. Probably more than 70% of my trades are based off of this oscillator from LUXALGO. I will trade some things with other calls as well. But what I'm looking for, there's different things this indicator communicates to us. And I've talked about this on the channel with Josh and the community before, but I love seeing reversals. These dots that come down below, or the dots and the triangles that go above, those are reversal indicators. I love finding confluence of three indicators. Green reversal. I like to see the hyperwave or the oscillator, this line that's going up and down that's very similar to the RSI. I want to see a bullish cross and a bullish momentum green dot form. And then I also want to see
when
this
you say bullish dot, when you say bullish cross, you're referring above the 0 line or the 50 line, I mean?
Yeah, good clarification. No, not a cross of a 50 line, a cross of, you can see whenever we're bearish, this it's called a hyperwave, but it's the oscillator movement. It turns gray, right?
Oh, I see what you're saying. So yeah,
whenever we're bullish, it turns green.
Yeah. Okay.
So I want to see the green reversal down the bottom. I want to see the green cross in the hyperwave. I want to see this turn green. And then in the middle, this is our money flow. Is more money flowing in, or is more money flowing out? I want to see that turn positive. It's nice when it's been in the red and wants to go up higher, but as long as you get a consistent upward movement of money flow, you just got yourself a trifecta of a buy signal. And these are absolutely deadly at trades.
Now, what time frame? What time frame are you on?
This is the daily. This is the daily right here.
Nice.
And the bare minimum, you trade this up to the signals and overlays indicator on LUXALGO called the smart trail. Take a look, Josh, and we'll walk through it. Take a look at where we rejected right there. That red line right there, that is the smart trail. This was a very clean-cut trade. Anyone who had used LUXALGO to trade this move would have pinpointed it perfectly. That being said, we are regrouping. We rejected on this level. We're wiping out a lot of the gains that we had, and that has to do a lot with, and I'm going to get more complicated here, but I'm trying to keep it simple. With all of the bullishness that happened right in here, liquidations begin to pile up. I have an indicator here that we built with LUXALGO called the liquidations chart. Let's turn some other things off.
All right, you're crushing it, but you're also going fast. Because I know that there's people that don't even understand what the term liquidation means. That's just a big word. So let's go slow.
Yes. Let's discuss what liquidations are. So liquidations, as Josh was talking about earlier, he set up a trade on XRP, right? But he told you where he put his stop loss, okay? So where he put his stop loss would have been counted as a liquidation level. In his case, let me flip over that real quickly. Let's just talk about this. So Josh bought somewhere here on probably 231, somewhere in there. He set his stop loss at 232 or 230 is what I think he said. All right. What happens at 230? If other people were in agreement with Josh, if the price goes below this level, his position will be liquidated, meaning his entire trading position will be wiped off. And when Josh enters these trades, when anyone enters these trades, this information goes onto the exchanges. The exchanges allow this to be public information. And so you can at any time, using a liquidations indicator, you can see where there are hundreds of thousands, if not millions or billions of dollars worth of liquidation levels, meaning if the price comes down to this level, X amount of millions of dollars of, in this case, to the downside, long positions or buying positions would be wiped off and people would lose their position. The reason this is significant is because experienced traders, whales, they love using this type of information to target getting rid of weaker traders, getting rid of simple positions before an upward move. So if we're bullish right now, and when we're looking at this right now, the price might want to go this way, but an experienced trader could, if he has enough volume, could manipulate the price to come down, liquidate Josh right here, liquidate all these other people. We could come all the way down here towards, heck, 218. wipe out all of these longs, and then start a fresh rally. So anyone who entered a long in this camp, they don't get any of the gains. Their position was canceled. But the experienced traders, after wiping them out, now they can gain the profit of entering down here and then taking advantage of all of these short liquidations that are up above.
Now you got XRP. For illustration to your point, that's really what just happened with this flash crash that we had, just here this week. So to illustrate that, I'm just curious. Can you still see the wipeout on yesterday's price action, or even I guess that was today's price action?
Yeah. Well, take a look at this. So this is what I'm going to back this up. Let's go back on the 30-minute chart to when a couple of days ago, 2 days ago, when Bitcoin was back up above 100,000. Look at all of these liquidations right here. So this is millions of dollars of long positions that if price comes down, they will lose their long position. They'll lose the trade. They'll be stopped out. They'll get out. So this was a massive target to the downside, and is the explanation. If you watch how this plays out, watch it goes away. That's the only part of the indicator you can't watch it play out. But you saw all those bright liquidations right here. Watch as I let the price play out. We just came down and wiped a lot of that out. Now, the only argument that says that the bottom might not quite be in yet would be if I turn this indicator back on. Clearly, we still have a large chunk down beneath us. And on this level of a chart, on this 30-minute chart, meaning what's possible in probably the next 6 to 12 hours, it's not a guarantee, but you still see some very interesting liquidations to the downside as low as 88,000. So everyone should be aware. I'm not guaranteeing. This chart doesn't guarantee or predict that this has to be wiped out, but it does tell other traders, hey, if we go this far to the downside, we can liquidate millions of dollars.
Now, let me add to that. First of all, thank you. I think you're doing an incredible job. I love having you on the show, Tim. Now, the other thing is that once you get through that very, very bright green liquidation spot, yellow spot, you get beneath it, what that tells a bunch of other traders like me and Tim is, you know what? We're through it. There's no point in them pushing this price down anymore. Down beneath this, it's a safe place to get in. And so you're just above it, you're in a risk scenario. Beneath it, you know what? Even if it's fallen and everybody else is panic sold and they've lost their position, but beneath it, you're like, yeah, they got nothing to pursue going down in price right now. So, that's when you could be more confident about taking a position. Now, Rebecca Carr asked a question, so we're kind of using this as a teaching time. Rebecca Carr said, his entire trading position being wiped off, does that mean he gets stopped out by the stop loss? Okay, so I want to be clear. If my stop loss triggers, I'm only losing 200. I'm up on this trade about $1,000 right now. But if it did get stopped out, I would lose 200. It's around time now for me to put this back into break even. But no, I wouldn't lose anything. My stop loss has protected me from any loss. But I'm going to bring my face on so you can see Tim and I when I explain this. When people leverage trade, they don't use a stop loss the way that you saw me leverage trade. One of my 4 disciplines: trade the trend, use a stop loss, control position size, don't overtrade, don't revenge trade, don't begin to scale up after a loss, okay? So I really do try to follow my disciplines. But people that don't, they can go from being in the money to radically out of the money in a flash of an eye, right? And they could be down 2,000, and they go, oh, I better not sell now because it'll come back. And many times it does. But let's just say that the market makers keep pushing it down. Now they're down 2,000, 4,000, 10,000. And you might say, well, that's crazy. Well, first of all, crypto moves wildly. Eventually, they get a margin call, which means that they need to take some more of the cash that's not invested in crypto from their cash account. They begin to get a margin call, and it starts eating away at the cash that's not invested. But let's just say those fools were 100% leveraged, 100% in with their margin, and they weren't using stocks with Josh control your position size rule. Now, in my leverage account, I never go more than 50% in. And even for some, that might seem radically extreme, but I never go more than 50% of my cash at any given moment. And the larger my account becomes, the smaller my leverage position is. I took a trade account from 53,000 to 550,000 in November in roughly 3 weeks. And I had to begin to use smaller and smaller overall leverage position size. Now, I have started a new account, and someone asked me, why have you started a new account? Because I want to change my risk profile. There's lots of reasons I could go into. One of them is when you have a huge account and you move, if a huge account could be 50,000, mine was over $500,000. And if you then you got to start trading different assets if you want to use large position size. Like you have to start trading Ethereum or Bitcoin because you can't get fills. So now you're not really aware of yourself. You drop a bag on XRP and you buy $250,000 in one order. You're going to get a crazy bad fill price, right? There's lots to it. But here's the point. I've started a new trade account the other day with $12,000. And it's only a week old. It's the one I've been showing you guys. And it's up to 44,000. It's only a week old. My goal is to take this account back to $500,000 in the next 30 days. Who knows if that'll happen? I'm trading it every day. I'll let you guys know. I show you my wins. XRP has been my area of focus. But if I didn't have my disciplines for trading futures and I went all in to leverage and I had no margin to feed my position, and then I ran out of cash in my position and it kept dropping, they'll take the whole thing. Okay. All your money's gone. Your account's cleared. You got zero. You got nothing, right? Because you never set a stop loss. You saw in front of you guys that I set a stop loss on that trade. That trade up, it's just sitting right now at around $900. I don't know if you guys can see that. Sitting at around $900, right? I've got a stop loss. If I kicked it, now it's at 1,000. Discipline is the path to becoming wealthy. I talk to a bunch of baby traders. I talk to people that are my friends. They want to get in on what I'm doing. They see my success, and none of them have discipline, nor do they want it. But truthfully, it's the disciplines that are laid that become the foundation to being rich. If you want to be rich, then you want to be disciplined. Okay, let me get off that for a moment. To answer the question, mine will just stop out whatever the amount of money is that I've stopped out. But when he's showing you those liquidation charts, those are people that are, do you know that I searched this? You guys can Google search it. The average leverage position for future traders, okay? Now, I will go as high as 21x. And the only reason why I do that is sometimes they have competitions. And last month, I was the 4th most successful trader on the platform that I was trading on. And so I won some free money in addition to making money. And I had to use the 21x leverage to be eligible. Normally, my multiple is between 3 to 7x. What he was talking about earlier is that when you're all leveraged in and you are up, you have the average, if you search it, I apologize for jumping around. The average leverage that people are using is 100x. Did you know that, Tim?
That's crazy. That is absolutely ludicrous.
I have never in my life used 100x, and I think
not one time.
And with all of my skill and success, I think trading with 21x is a madman's task.
Yeah,
and
that's high.
I use small dollars amounts, so like maybe $1,000 at 21x, and I do it to be eligible for their giveaways. They're like giving away a Lamborghini the other day, and I thought, okay, well, I'll give it a shot. But most people don't use discipline, and as a result, when the leverage hunters come, Tim's sheet shows you where the leverage lies. They're going to push it down. They're going to force those people to be liquidated. They're going to grab all their money. And then when they're done, it can go back up. So it can entice them to go find some money, max out their credit cards, and get back into the game. Am I wrong, Tim?
No, you hit it right on the head. You're right on the head. The simple version and for simplistic natures, what you need to know about any liquidation chart you ever use, it simply gives you interesting targets that experienced traders are utilizing to navigate the markets. If you guys haven't noticed this, you haven't been watching charts for a while, in the stock market, in the crypto market, in the Forex market, in a bull market, you don't get just green candles. In a bear market, you don't just get red candles. It's choppy up and down. You want to know why it's choppy up and down? It's because a lot of times the experienced traders know that they can get that chop and they can liquidate weaker, newer, less experienced traders. And one of the most deadly tools they use is a liquidation level to understand, all right, we're bullish right now, but how do we get rid of the weaker bulls and discourage them so that we can buy all the dips and we make all the money? That's why I use that chart, and that's why I had it built for the bros community. Come check it out. I mean, you guys are going to come on my show here in a little bit. We can talk more about it. I saw, Josh, someone was asking just really quickly for longer term XRP levels. I would love to show you what I showed my community yesterday.
Okay.
If anyone's looking,
let's do that.
Yeah.
Let's do two things. I'm going to answer this question, and then I'm going to have you do a review of XRP, and then I'm going to do a long-term review of XRP. Personally,
Cool.
I think it's going to be excellent. I'm very pleased with my own technicals, so you don't want to miss them. And it's the main purpose of this video today. So I'm going to let him go, then I'm going to go. But let me answer Wheaton Global Communications question. Joshua, please answer the question. Is it okay to DCA leverage positions? I want you to hear me. It's so important. It's when it comes to leverage trading, the disciplines are what is going to make you profitable. So the answer is, if you have 10% of your cash into a position and you have the ability to DCA, the answer is yes. Earlier, when I was live trading with the Stocks with Josh community, I entered XRP when it was I forget the percentage, guys, 4.5% down. But I pointed out to the community that it normally goes down, and forgive me, I have to go and look at it, but let's say it normally goes down 4.6. So I entered at 4.5 because there was some support there, but I then added about 10, 20K worth of position size every few moments down, and then it popped and reversed, made a beautiful $4,000 on that play. I did that with you guys live. So yes, I DCA'd, but my overall position size was very small, and my DCA window was in the moment. If you are trying to DCA leverage from day to day, you're not doing the right thing. You're not doing the right thing. Stop that immediately. You don't. That's not a good idea. That's for investing. Go DCA in your Coinbase account if you want to hold something long. But in a futures account, it's scalp only, and so just keep that in mind. Let's hear your thoughts on XRP, Tim.
Yeah, I'm going to try to be brief here, and I'm going to start with some macro things that people should be aware of, and then I'm going to show you what I'm looking to buy at the moment. So XRP breaking out of a long-term symmetrical triangle pattern. People were very bearish on it right in here. I told people I didn't know when it was going to happen, but I said a couple of months ago, guys, there's going to be a week or 2 week period where XRP is all of the talk of crypto. Everyone's going to be raving about it. I didn't know how bullish that would actually end up being, but this formation that has now been developed should not be ignored. Anyone who's studied technical analysis, when you see an extremely fast and massive upswing, this is called a flagpole. And what you're looking for to confirm it is either a pennant, which is a triangle, or a flag, a channel, to come on the other side of it during consolidation. You're looking for big volume during that flagpole, lower volume during consolidation, and then a big volume breakout. Well, right now, we definitely have the flagpole. We've been consolidating since the high back here on December 2nd, and we are getting very close to a big breakout to the upside. The breakout for this, if you take that same length of the flagpole and you move it over, anchor it at the last support touch, gives us a target right now in XRP of just under $12. Now, this is not something I'm thinking is going to happen the next couple of weeks. This is like a bull market top type of expectation. But that just kind of gives you the thoughts of like just how bullish XRP can be. And now you come in and you say, all right, where should we be looking to buy right now? Larger time frames are very bullish. We're looking at lower time frames, like the 4-hour chart right now, I think is the most intriguing level to keep an eye on right now. I told our community last night to scoop up some here around 226. It sounds like Josh did the same. Anyone buying in this level during this first orange box between 224 and 228, great buy spot. My reason for this is because, yes, we got a 4-hour sell signal a couple days ago, but this is the first strong level of support with this blue line right here called a smart trail. If we lose it, though, if we do drop below, I told my community, interesting, we actually bounced off that support level there. But I told my community, if we drop down below, remember, if we zoom out, let me turn these off. Inside this bull pennant, this symmetrical triangle pattern, we have a rising level of support that already has 3 touches. We very easily could come down here into the 4-hour take profit suggested level after this sell signal in a camp of 203 to 212 is the area that I'm keeping an eye on right now for a lower pullback on XRP. With that being said, I like this buy here. I like this buy here. If we lose this green line and we start to drop below this wick right here, the one we had back on December 10th when we came down to 189, if we lose 189, all of a sudden, this formation becomes very much in danger of not playing out. I'm the type of person, I like low leverage trades. Like for XRP right now, I'm probably entering a 3 or 4x, maybe a 5x. But what I'm doing is I'm entering, as we just kind of talked about, I'm entering at these 2 different levels. These are very interesting levels to me. And I'm putting my stop loss down here at 189. I want to get out. And what that allows me to do, if I am entering this long, let's just kind of go right here. From right here, let's say I'm in a 3x. My stop loss, 16%, only puts me at a 45% loss. If I enter right in here, I'm only looking at about a 30% loss. I'm protecting my gains massively by putting a conservative stop loss, but I'm also protecting it by saying, hey, I want more room for error, so I'm going lower leverage with those positions. But if I'm right, and this is one I end up holding for a long term, I'm very much agreement.
Okay. I can tell we're at light speed, just a little slower.
Yeah. Well, I mean, ultimately, my point is, so there's the only thing you can do when you're investing and trading is protect yourself. The only thing that you have control over is how much you are risking. So if I'm looking at this level down here, let me go back to this support level. If I'm looking at this level and saying 189 is my do or die point, I'm bullish as long as we stay above 189, you don't want to throw on 30, 40, 50x leverage, in which case we would be stopped out and lose our position long before 189. This is why I'm looking for a longer term position here on lower leverage that does not risk a massive portion of my portfolio. But again, if I put a 3x leverage on here, let's go and set up an actual long position. Let's say I long in here at 212 or 210. I put my stop loss here. I'm risking about a 9% position, which means on a 3x, just under, that's like a 27% loss. But my trading portfolio, or where I'm holding this for, is an expectation of a move. Let's front run 1167. Let's go lower than that. Let's just go to $10, a lower end level for a price prediction for XRP at the end of this bull market. Well, this position is a 376% rise to the upside on 3x leverage. We're talking about over 1,000% move, or another way to put it, a 10 to 11x on my investment. But I'm protecting myself with low leverage. I'm protecting myself against a move that more than likely is not going to happen, but I want to be open to the possibility of it and make sure I have a good position on this entry. This is a great way to make a lot of money, but also be in a safe position and not risk too much money. The truth is, and you were talking about this earlier, Josh, a lot of people can pinpoint levels of significance with support and resistance. Nothing's ever 100%, but there's some high probability moves out there. However, the difference between successful traders who make a lot of money and bad traders who lose everything is the discipline to understand proper risk management. Yes, if I guess this right, let's say the price drops to 210 and doesn't go any lower, and I throw 100x on there and I pinpointed a perfect support level, I could make a whole lot of money. I mean, all of a sudden this goes from being just 300% to this could be over 30,000%, right? But that's extremely risky. I, on the other hand, am going to sit here and say, you know what? I'm willing to make less profit, but still a lot of profit, and protect myself with proper risk management. And if I'm wrong about this trade, I live to fight another day. But the man doing 100x, if he's wrong about this trade, he wipes out his entire portfolio with that one bad move.
All right, let's okay. First of all, I'm going to give some commentary. Thank you, Tim. I love it. I'm gonna give quick commentary on XRP. But before I do that, I'm going to talk about the Fed minutes and some analysis. So basically, the Fed is concerned about inflation, right? And that's concerning to the market because if he's concerned about inflation, it means he's not going to do the easing that they had hoped for. Why did they want the easing? Well, they wanted a strong economy and easy money. They wanted both. But easy money leads to inflation and a strong economy. That's why the Fed exists, to tighten up the belt. And so the market, they just want everything. They want that Goldilocks, easy money, strong economy. And the Fed is basically saying, I see inflation. Now, the Fed lied. Go back and watch my video. It was titled Fed Lied. The day that he gave a 50 basis point rate cut, I did a video titled Fed Lied because because inflation was still the problem. He said that he was going to pivot from inflation to unemployment because he was more concerned about unemployment, which was transitory data. He said inflation was transitory. That's not true. The employment situation was more transitory. And he got that one wrong. If he wanted to call something transitory, he gave a huge cut, followed up with more cuts, and inflation is still a problem. So he's come out and said this. I want to read it to you. He said, Federal Reserve officials debated the staying power of inflation at the central bank's December meeting with a range of views on where interest rates could settle in 2025. Policymakers emphasized that policy is not on a preset path. That's a problem. And will need to evolve in response. What does it mean to not be on a preset path? Which means they have no idea where it's going. Preset path means we got control of it. It's reined in. We're just corralling inflation down. We're in charge of inflation. He's patting himself on the back. I nailed it. I'm the best Fed ever. Now he said the dogs are out. The horse has jumped the fence. Inflation is no longer on a path. So that's the preset path he's talking about. And will need to evolve. What does he mean there in response? He means I got it wrong. I lied to you when I gave you a 50 basis point cut. Now I'm going to have to do something different than I did before. Well, what's different than what he did before? A rate hike. That's what's different. So if you're cutting at 50 basis point and then giving more cuts, we don't want you to evolve. We want you to stay the course of cutting. Evolving means you're changing your plan. That's why I said the Fed lied. In response to both economic data and now this is the part that I find amusing, and I'm not getting political. New economic data and the new administration. Well, that means it's Trump's fault. He ruined the economy. I had inflation under control, Fed Powell will tell you. But then Trump came in and he started, slapping tariffs on everybody. And that's how it got out of control. Well, the fact is that really since September, inflation's been slowly ticking higher, which means it was never under control. And he used that little window of opportunity to give us a rally for the sake of the election. And that wasn't true. It was not truthful of the Fed that it was time to pivot. And they manipulated some unemployment data, in my opinion, to suggest, we had the hurricane, this, that, and the other. The economy is still strong. Inflation is still out of control. And why? It's because the politicians are continuing to spend. So that's the basis response to the FOMC meeting. Don't forget that I'm going live with the Stock Squad later. After this, I'm going live with Tim on his page, but then I'm going to go live with the Stock Squad. I think we're going to have some great conversation regarding the Fed, but that's my opinion on the Fed. Now, for an XRP, I know you guys I'm tired of XRP. I'm tired of it, Josh. This is the only... Josh, go ahead.
I'm gonna say, let me go. I'm gonna go prep the show over there, but we're gonna see you and everybody over on our channel, Investing Bros, in just a couple of minutes. But thank you for having me on. You finish up here. I'll see you in a couple of minutes.
Thank you. I appreciate you. Talk to you later.
All right. Bye.
All right. Thank you, Tim, for being a guest, guys. Don't miss this next half. We're gonna be talking about other things than XRP. But here, I'm literally gonna give you, I think, the only technicals that you need on XRP. That's right. Everybody else, you can just skip them. Come home, XRP Army. Come home to the Stocks with Josh page. I'm going to take care of you. I have high conviction on what I'm getting ready to show you. And I think we're going to see it play out, right? So let's go into the chart, and I'm going to tell you what is likely going to happen with XRP. And of course, time will judge whether I've got it right. We'll see. Let's go check it out. All right. Here's the most important thing that I want you guys to be looking at, okay? So we're looking at weekly candles. Each candle represents 1 week worth of price action on the XRP chart. And forget about, if you're not into XRP, don't even worry about it. This is, now we're in charting school, okay? We've got weekly candles above us. We've got the RSI beneath us, right? And here's what I want you to understand. And yes, Tim is right. This was a monumental flag pattern, right? And we are consolidating right there. And if we were to break to the upside, first of all, let me explain to you what it would take for XRP to break to the upside. We need to get Bitcoin up back above 100K, 108, right? 108 to 116. And then you would see the XRP engines firing back up. Now, don't get mad at me, XRP Army. I'm bullish on XRP. I'm making a ton of money. I'm going to be actively trading XRP with you guys. So you know that I'm interested in it. But yes, it would take Bitcoin getting above probably 104 minimum, if not 108, for this to break out to the upside. And if it did break to the upside, then yes, we would take the flagpole, right? We'd put it at the breakout spot, and it would predict the next price for us, which is largely right around $10. But let's go back in time and see if we can get any clues as to what happened the last time XRP had a monumental breakout. Well, let's look at it, guys. It's not hard to see. Look at this beautiful oversold condition on the RSI. When did it do this before? When did it get up this high? Well, it's never gotten up this high before, but it did it back here. This was another monumental breakout moment on the RSI, okay? And what does this price correlate to? Now, let's watch it carefully, guys. It correlates to an incredible breakout in the past. And we had a beautiful flagpole. Okay, but let's zoom in a little bit and see what happened. This incredible flagpole. Let's go in and I'm going to just, it didn't break to the upside. It consolidated and it didn't make the next leg up directly. Okay, it didn't. It actually broke down. So it had this overbought moment. It turned into a flagpole. It broke to the downside on that flagpole. And it actually came back even lower than it had been before the flagpole breakout. So kind of a really, really rough moment. And then after it wiped out probably everybody that went long on XRP, we go back to what Tim and I were talking about. It went on a second wave. That's this peak right here on the RSI. Now, this is classic, guys. This is classic charting. When you have a price that makes a new high and momentum that makes a lower low, it's called bearish divergence. And that gave us the descending XRP that took us into the previous winter. So here's what I'm telling you is going to happen with XRP, okay? Yes, we got this beautiful flag, but I'm going to warn you all that that flag, it doesn't have to break up. It doesn't have to be a continuation. We could do just like we did before, and we could break down. And where would it go? Well, if it did what it, and I'm not predicting this, we're going through the scenarios, okay? It would do exactly what it did before, and it actually could come down and go even lower than the previous, than the breakout point. The breakout point was right around 50 cents. This bad boy could come all the way back to 42 cents. And believe it or not, if we were to carry suit and get another momentum push, so if we go down to the RSI and we break beneath the RSI and we consolidate, even while momentum is building, so even though price has collapsed, momentum is slowly building, we could then break out above the 70% level on the RSI, make another run up with lower momentum, and yes, actually be way up here in the stratosphere of $10. And so I hope you guys followed that. Here's what I want you guys to be prepared for. Let me bring back my screen. I'm bullish on XRP. XRP is relevant to me. Why? And I told everybody in my live trading session, I said, I love XRP. XRP is my favorite now. Is it because I care 2 bits about the XRP army or the fundamentals or whether Ripple is a good? No. Price is king on this show. Okay. Price is truth on this show. And what I'm getting in XRP is liquidity. I'm getting a bunch of buyers and sellers. And because of that, I can make money whether it goes up or down. And for as long as there's a ton of liquidity surrounding XRP, I'm going to be trading it. Now, if we got the break of that flag, and let's just go in and look at that flag one more time, because if we got the break of that flag and this began to pull down like it did in the past, giving us 2 momentum peaks, there would be, I could pull my 50K, my new 50K account, I could probably pull it up to $250,000 on an XRP flush like that alone. So let's go look at that real quick. We're going to zoom in on it. All right, let's clean up the chart and zoom in, guys. I appreciate your patience with me. I appreciate you all joining me. I hope that we're having a good show. I want to zoom in really clean on this. First of all, if you go back in history, I've been saying this. I wanted to comment on Tim's commentary on Bitcoin. Expect more volatility. A lot of you new traders are not expecting you're not expecting enough volatility, but look at these beautiful clean lines. XRP is giving us really nice clean lines. Let me draw this flag in. And why am I calling these lines clean? First of all, they're very, very clean, right? And what we're looking for, it's not even that hard. Just stop being bullish if a candle opens, listen to my language, opens underneath this flag. So if this is going to, these are weekly candles. If this is going to flush, if this is going to respect the flag and go higher, no candle will open underneath those trend lines I just drew. Okay, so I'm going to repeat that. If this is going higher now, no weekly candles will open beneath the flag lines I just drew. It's just that simple. If I see one open beneath it, then this has broken to the downside. Similarly, if this is if people who are thinking of shorting it here and are getting too bearish too soon, there should be no candles that open above that line I just drew. If they open up above this line, well, that's called a breakout. Now it's confirmed when the price goes above the previous wick. So let me be clear. The candle should open above my flag, and it's confirmed an uptrend when price goes above this top wick. Similarly, if it opens beneath my flag and price drops beneath this low wick, it's confirmed to the downside. And all the money is to be made going to the downside. Where could it go? Based on past history, it could go all the way below 50 cents. And then, yes, it could go all the way back up to $10. But that's how you trade it. Let me know in the comment section if you guys are wanting this type of breakdown. Appreciate the time that you guys have spent with me. This is the path that XRP will reveal to us in time. I'm 100% certain of it. Can I predict which way it's going to break? No, I'm not even trying to, okay? But if we look at the past, it gave us 2 momentum peaks. Now, the good news, if you're a bull and you just want to cover your eyes until the whole thing is over and hope that it gets to $10, the good news is that the good news, it could go all the way down sub 50 cents and still get to $10. Expect more volatility and take advantage of the volatility ahead of us. If, stop losses, that's why it'll protect my capital. Position size, you scale on confirmation. And then if you get it wrong, you got to go back to school. You got to slow down and figure out, why did I get this wrong? Was I believing these YouTubers that are just talking about it going to $2,500, $500, and they're just mega permanent bulls? They're the Michael Saylors or the Kathy Woods of XRP. I'm not that person. I'm just going to trade the charts. We're going to trade the price. I showed you how we're going to do it. And I'll keep you guys plugged in on the money that's made on XRP along the way. We're going to keep covering XRP. You guys heard my thoughts on the SPY. You heard my reaction to the FOMC. I'm going to take you guys, and I got to get over to Tim's page, but I'm going to take you into the SPY real quick and talk to you about something. I saw a question regarding the diamond pattern I've been talking about, and I wanted to answer it. So this is going to be for you, my friend. Okay, so I don't know that I have my diamond pattern drawn correctly. And you might say, well, is that a big problem? No, it's not a huge problem. The diamond pattern probably isn't drawn correctly. I do think that for sure this is the top and this is the bottom, but I don't know that these arms are drawn correctly. So let me illustrate that to you. It could be that I have to use this one here and these two here, and it could be that I've got to bring this up and bring that up, okay? And if that's the case, so here's why I'm going through this. The diamond patterns are not necessarily exactly the shape of a diamond, right? I don't think this is it right now because I still think we've got some time ahead of us before the election as well as earnings. And I largely think that we're going to vacillate in the previously drawn space that I had. But I wanted to reference it for those who are drawing their own diamond patterns. Someone asked me, is today's move down confirm a break? And no, not in my diamond pattern. I think we have more room to possibly make new highs and new lows and go sideways for the next 2 weeks. But I did want to just take a minute and explain to you that this could change. The diamond pattern means only this. I want to reiterate this. The diamond pattern only means a market in indecision. So when a diamond pattern is found on the chart, they're actually less consistent than head and shoulders patterns. And you say, well, then why look at them? Because they do tell you something. They tell you the market's in indecision. And I think that's very important to acknowledge with the S&P. Even though we've come down, I think we're still in the diamond pattern. And how long will we be in there? We'll probably be in there until the end of January, possibly the middle of February. What does that mean for stocks? It means it's now a picker's market, which means that some are going to go higher, some are going to go lower in that same time frame, which means the SPY is largely going to move sideways because some of the Magnificent Seven is going to bring the SPY up, some are going to bring it down, which means that we're going to kind of continue moving sideways. Unfortunately, it's a buffalo market. It means it's not a bear market, not a bull market. It's a stock picker's market. And that's what we're going to do. Appreciate you guys joining me. Come join the Stocks with Josh Discord. I'm giving more trade alerts there. And I am looking to set up copy trading. Let me be very careful. I'm not doing any copy trading. If you join the Discord, you'll get impersonators, scammers who try to tell you I'm copy trading. I'm not. But you can go over to Blowfin, and you may be able to find me there in the coming days. So I left a link for Blowfin there. And in the app, Blowfin app, with the link I've provided, because you won't be able to copy trade me without my link. In that link, you'll be able to find me here shortly. That's what we're working on, guys. I appreciate you all. I'll see you over on Tim's page. Please come and join me. We're gonna have an interesting conversation there about other crypto that we didn't cover here. Peace and blessings. I'll talk to you all later.